Hey guys, you've joined us live here on Moneycontrol. I'm Manisha Gupta and we're talking about metals right now which have seen a decline yet again. Remember, last week wasn't a great one as well, and this week there is just so much more to keep an eye on. To begin with, there are rate hike concerns because we have seen PMI data from major economies like US, Eurozone and UK gain up on the higher side, and that is the reason you have fears about global demand growth going forward. But remember, there is one thing that the street will watch out today, and that is the first quarter US GDP numbers that come in tomorrow. This is ahead of the US Fed meeting, which is on 2nd and 3rd of May. So ahead of that, there is some jitteriness and decline that we've seen in commodities. I'll start with steel, and most of the steel stocks as well are trading in the negative today. That is because the steel prices itself are trading at a 4-month lows. It's trading below 3,800 yuan per ton, and that's weighing on to the other international markets. Well, the Chinese steel demand from construction declined by 19% for the first quarter of this year on an year-on-year basis, while the Chinese steel production has been increasing. So when you look at the month of March, the Chinese steel production rose by 7%. For the first quarter of this year, it gained up by nearly 6%, and the consumption hasn't caught up yet, and that's weighing on. And because the steel demand is not catching up, you have the iron ore prices as well trading in the weaker side. They are trading at around 3-month lows. There is increase in production for iron ore coming in from Vale, South Africa and Rio Tinto. And then the markets also are looking at the Chinese state planner saying that they have an eye on the steel prices and the dynamics of the prices in iron ore, and there should not be any manipulation. So all of these continue to weigh onto the ferrous metal prices. The non-ferrous metal prices also have seen a decline. So copper is trading at around 1-week lows, and we've seen China imports in the month of March decline by 19%. The premium for buying the metal on spot also has declined by some 27%. And even as the LME inventories are the lowest since 2005, the Shanghai inventories backdraw is looking at increasing when you look at the month of April. And then there is rising production in Latin America, and that seems to be weighing on the copper prices also. And then you have aluminum trading at a 2-week lows. You have zinc prices trading at a 5-month lows. So clearly not a very strong start to the metal as a sector. The street will watch out for a couple of things. One is the Chinese demand itself. Second, the GDP numbers. And if they come in on the weaker side, we might look at the dollar index declining. Most analysts will tell you that until the time the dollar index is trading above 100, there is a very slim chance that you will see metal prices gain up. But as soon as you see the dollar index fall below 100, there is a very bullish move that you can expect in case of the metal prices. In the meanwhile, in the last 1 week, we have seen most of the metal prices decline. Steel fell by 6%. You have 5% of decline come in for zinc, and 2 to 3% of a cut is what we are working with for iron ore and copper as well. The markets do believe the best of the fundamentals still belong to nickel and copper. This is where you should stay invested, even create longs as you move ahead.